let's just kick it off with a quick word on the PMIs. Europe, I mean, a little bit worse than expected, but we're above 50. I guess beggars can't really be choosers, right?
Quite right, you've kind of hit the nail on the head there. The fact that it's still above 50 is going to be the positive angle here. I think also maybe taking a look at Italy, it's just managed to get itself back into positive territory as well as far as their manufacturing PMI is concerned. One less headache to consider, but pretty poor across the board.
I want to get a word on the French budget as well. It's being unveiled now. Does the state of the Eurozone economy generally give them sufficient excuse for taking that no austerity budget approach, do you think?
This is going to go down pretty poorly, I guess, across the borders over in Germany. They certainly would have liked them to take a tougher stance on this, looking for a sort of firm foundations before any sort of talk of quantitative easing and the likes can be really thoroughly thrashed out at a later date. I think the fact that their timeline has had to stretch is maybe no surprise, especially when you look at countries across their borders. They've reduced the tax liability for the lowest earners over there, which I guess will help the unemployment figures. But in reality, maybe if we take a glance at earlier in the week, we heard the news that Air France had once again gone back to work and the strike had been cancelled, and they were this was really on the back of no agreement being reached. They just went back to work and the strike was ended. We're kind of sitting here knowing that ultimately a strike is in the offing somewhere down the road in the future when they still can't agree with things. And this is really, I think, the biggest issue that France has, needing to deal with these unions, change the mentality, the psychology of their workforce, and make them quite frankly more competitive on a global scale.
How's the market going to view this ECB meeting tomorrow, do you think?
Well, it'll be difficult for Mario Draghi and his team to come out with too much fresh. I mean, the targeted LTROs that they did in the last tranche, 82 billion euros worth, was, I guess, on the small side. But when you consider that we've got bank stress tests imminently, that's maybe no surprise. Maybe we might see a different figure come out in the December tranche. But until that point in time, I kind of think they want to keep their powder dry and just hope they can, fudge things until that point in time.
A quick final word on the UK food retailers. I mean, we gave the details, so I want to get an insight from you on whether you like the stocks at these levels. They seem to be helping chase each other lower right now. Are they a buy, though?
The competitive nature that they have with each other looks like it's moving on to how low they can get their share price as well. Year to date, Sainsbury's down 33%, Tesco down 46%, Morrison's down 39%, Tesco 11-year lows. I mean, this really does look pretty ominous. I got to say, it feels to me that there might be one or two skeletons still in the closet and a little bit more negativity to be factored in. So I think there might be lower levels to be reached yet.